Within the U.S., you like more cyclical sectors, and utilities actually you were underweight, and that was one of the stronger performing sectors in the first half of this year.
Yeah.
Now, are you anticipating a leadership change within the U.S. stocks?
Well, we do. I have a pro-cyclical tilt on my U.S. sector emphasis, and again, we start with valuations, and one of the things that has been a consistent deterrent for me in investing in utility stocks is that valuations have been excessively high. With the fact that we think that the Federal Reserve is starting to tighten, those higher interest rates also tend to work against utilities. So utilities have had a nice run. I think that it's not a good idea to chase this. As a matter of fact, if you've enjoyed the first half run, this might be a good time to take some money off the table.
Let's move to fixed income. You think it'll be a while until we see a meaningful rise in rates, and of course when that happens, perhaps we'll revisit valuations in the stock market in general. But in terms of fixed income, what's your thought on the allocation front for bond investors? Because it's been very tricky to be in fixed income, and we've seen some dramatic moves as of late. High yield, for instance, we've seen some of that money come off the table.
Well, one of the, as you look across the fixed income landscape, just to kind of cut to the bottom line, I believe that the U.S. economy is still on solid footing. That's an important fundamental backdrop for what I call the credit space, and that includes high yield. So we know that high yield spreads are very narrow on a cyclical basis, and that means that the potential upside in high yield is more limited. So it's not surprising that we're seeing some chop as we go through the summer months. I do think, though, that fundamentally the U.S. economy is continuing to grow. It's going to get better, and that means that the credit space is the place to be, particularly over and above Treasuries. So, ultimately, Janet Yellen and the Fed have been clear. They're going to stop their purchases of Treasury securities. Probably sometime next year, they're going to start raising interest rates. So, from my perspective, the writing is on the wall.